Thank you, Joe. I'm Keith Phillips. I'm the CEO of Piedmont Lithium. Before I took this job 18 months ago, I was an investment banker in New York for 30 years, and I ran the global mining teams at Merrill Lynch, JP Morgan, and Bear Stearns. And we're spending a lot of time following up on what Joe just said, talking to all these different sources of capital, which are really important for development stage companies, as you'll hear. The one conclusion I would add to what Joe said, and I agree with everything he said, and that's actually the best summary of kind of the financing conundrum that faces juniors these days, is I think it's the best time ever for people like those of you in the audience who are knowledgeable investors who want to think through what opportunities are best to choose from. When you go from an active market to a passive market at the institutional level, I believe there are vast inefficiencies in the valuation of juniors, and it's a real opportunity for people. So Piedmont Lithium, we're in the Piedmont region of North Carolina. Piedmont means foothills. We're in the foothills of Appalachia. As you'll learn, this is where all the lithium in the world came from the 1950s to the 1980s. The lithium business is booming, as you know, with the growth of electric vehicles. You need lithium for lithium-ion batteries. You need lithium-ion batteries if you're Elon Musk or everybody else building electric cars. I'm going to talk today just about the project, not about the sector, but we'll be around and happy to talk about the sector. Two more points I make on the summary page before I go in. This is the only conventional lithium project in the United States. There are several in Canada. There are dozens in Australia. There are brine projects in South America that are conventional. This is the only conventional American project. It's based in North Carolina. We're listed on the Australian Stock Exchange, but also on NASDAQ as of last May. So we're one of only 2 lithium juniors listed in the United States. This is a little bit of a dense page. This is on our website. We have copies of the whole presentation out at our table as well. But again, 5 key points. We have an ideal location. We think this is the best located lithium project in the world by far. We're 30 miles west of Charlotte, North Carolina. I'll show you that in a minute. And there's 50 plus years of lithium processing experience in the region, which is unique. There's nowhere else in the world like that. Everything about our project will be conventional. Joe mentioned Nemaska. They have a great project in Quebec. They are pursuing a new novel technology on the downstream side. We hope it works for their benefit and everyone else's, but we're not introducing any new technology in our story. It's all conventional. And this has been done before in North Carolina. The economics of the project are exceptional. We currently only have a 13-year mine life, but with that mine life, we have an $888 million US NPV, and we have a $50 million market cap, to put that in perspective. We believe that there is vast upside and vast exploration potential in the belt. The U.S. Geological Survey identified 700 million tons of potential on this belt back in the 1970s. About 50 million of that was mined by what are now Albemarle and FMC. We're the only guys active in the region. We currently have a 16 million ton resource. We think we're just scratching the surface. And we have a superior strategic position. Our goal is to make money for shareholders. That may involve a strategic transaction at some point. This is the only U.S. spodumene project, and it's very closely located to two of the largest producers in the world. So the map in the middle shows the green trend is the Carolina Tin spodumene belt. That's the only spodumene, hard rock lithium belt, of any scale ever identified in the United States. There are belts like this, many of them in Quebec and all over Western Australia and other parts of the world. But all the lithium in the world came from the 2 mines and the pictures on the left-hand side. The top left photo is the old Hallman Beam mine ran by what's now Livent. The bottom left picture is the old Kings Mountain mine run by what is now Albemarle, #1 lithium producer in the world. Those mines shut down in the 80s and 90s after 30 to 50 years of production. But when they were operating, they built the chemical plant you see in the photos on the right. Those are the only two large lithium processing facilities in North America. There are no others. There aren't 15 of these around North America. There are only 2. They're both in North Carolina, 6 and 12 miles away from our location. Charlotte's not on this map, but it's about 30 miles to the east of us. That's a city of 2.4 million people, second fastest growing city in the country in the U.S. We're close enough to have all the benefits of the infrastructure, but far enough away to not have any of the NIMBY issues you'd generally associate with an urban area. The next page was put together by our consultants at Primero. Primero Group in Perth, Australia, and in Montreal is the leading consultant to the lithium industry. They have built all 4 of the recent spodumene projects that were built in Western Australia. They have a fantastic track record. And when they stepped on site the first time about 18 months ago on our site, they looked around and said, gee, this should be the lowest cost lithium producer in the world. And they just because of the infrastructure, the topography, the location. Just quick highlights relative to, say, Nemaska, since we're in Canada. The column on the right-hand side is illustrative Canadian costing. So our labor rates in North Carolina, all in $42 an hour. That's higher than Martin Marietta pays. They're the largest mining/aggregates company just down the road from us. In Canada, our consultants put $65 an hour into this chart. Nemaska's labor rates are actually, in their feasibility study, $93 an hour. That doesn't include all the camp costs and associated. We think their all-in costs are probably more like 150, more than triple ours. They have low-cost electricity, but most of the spodumene pegmatites in the world are in Australia, where the electricity costs are 17 to 25 cents a kilowatt hour. Ours would be 6 cents in North Carolina. Diesel, natural gas, far cheaper. Transportation, a fraction of what it will be in Northern Canada or Western Australia just because of the distances. We don't have any government royalties. We're on private land, and we have a very low tax rate. So that all translates into fantastic economics. This is the lithium hydroxide cost curve put together by Roscoe for 2023. The green bars are spodumene projects. The blue bars are brine projects. The reds are Chinese converters. So there are 3 or 4 key messages on this page. Number one, despite the myth that brines are lower cost, to produce hydroxide, which is what you need in high nickel chemistry batteries like those that Tesla uses and everybody's moving toward, you need hydroxide, not carbonate. So to produce hydroxide from a spodumene deposit like ours, you can go direct to either carbonate or hydroxide. We would go directly to hydroxide. It's a more valuable, faster growing project. From a brine deposit, the first product you produce is carbonate. You then need to spend on average a couple $1,000s to upgrade to hydroxide. So the brines become middle of the cost curve. The Chinese converters will always be the high cost producers because they're importing raw materials that they buy from South America or Australia or potentially us or Nemaska in the future. So we'll be a very low cost producer and in an enviable location. And we're the only project on this map that is American, and we believe at the end of the day that'll have value as we sell products. This is a fairly dense page, but what I'd highlight is in the top middle, $888 million US net present value of our project currently, based on a 13-year mine life you see in the lower right. We're drilling now. We've had results. Some results we've announced. We'll have more to come. We expect to update our resource in May or June, update our scoping study shortly thereafter. I won't go through this page other than, and we're happy to walk you through this at our table, but there's vast exploration potential, partly because we're getting more and more land. When the company was founded 3 years ago, there were 3 options on 415 acres. We now have 1,824 acres. We're the biggest landholder in this region. This is all private land. It's not something you stake on your laptop. You got to knock on doors and build a package. So we think we'll get far more land. Most of the land we control, we haven't drilled on yet. We think there's dramatic potential to make the project bigger. Given that we're in an audience, I thought I'd introduce this page, which is this profitability index. I've seen a little bit, Arizona Mining use this, where you look at after-tax net present value of the project relative to initial capital. And we've just benchmarked this against other non-lithium projects, good projects, Trilogy, Sabina, Corvus, Osisko, Cleantech, series of projects. Our NPV of 888 versus our initial total capex of 470 is 1.9 times. When that NPV goes to $1.25 billion, it'll become 3 times. It's a highly economic project. Quick snapshot, we're listed both in Australia and on NASDAQ. Our market cap again today is around 50 million. We raised money quite successfully in Australia without a warrant in December. So we have $9 million US in cash. That's all we need to advance the project for the next several months. But it's an exciting project. We'll be raising more money and driving it forward. We also have research coverage from Canaccord, 8 Capital, Roth, and Roth as well. And printouts of that material is out there as well. And I just added this last page on lithium demand fundamentals. Happy to talk more about that. My one punchline would be the Tesla Model 3 is the single highest selling car in America right now. They just cut prices. It's going to sell even more. I bought one 3 months ago. It's a fantastic car. And demand for lithium is growing dramatically. And we think we'll be an important part of that. I think my 10 minutes are up.